Welcome to the Treasury Update podcast, presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in.
Welcome back to the Treasury Update podcast. You're listening to the Learning from Financial Fraud series. In this series, we explore multiple major financial fraud cases. We discuss how each one occurred and was kept hidden for a period of time. And we'll dissect how it was eventually discovered and get insights and guidance on how to prevent these types of situations from happening to you and your organization. I'll be your host today, Jonathan, Media Production Specialist here at Strategic Treasurer, and I am here with Craig Jeffrey, our local fraud expert.
Thanks for the superlatives at the front of that introduction, John. I'm looking forward to this continued discussion and dialogue on these fraud cases. They're fascinating, they're scary, and they're instructive in a lot of ways.
Cool. Well, let's start off with a recap of what we've covered so far in this series. We've covered three different fraud scandals. The first one was Parmalat, and then Satyam, and Wirecard. Craig, can you give a recap of these three situations?
Yeah, for those who read the footnotes, like when they see a footnote and they actually read the entire footnote, they go pull it out and read the entire book. We invite you to listen to the other podcasts on these. Parmalat was guilty of falsifying records. They were a big dairy company. They fooled auditors, including fooling them to the tune of $4 billion through one bank. And that's an interesting story, what happened there. And the loss was quite a bit more than that. Satyam was an Indian company, IT, all kinds of fictitious accounts that were created, particularly creating fictitious employees, which they used to siphon off funds. This was a huge, more than $1 billion fraud. And this was found by a confession letter. One of the perpetrators wrote a confession letter easing their conscience, but bringing this to light.
If you have fake employees, they're not going to be reporting you.
Employees that don't exist can't report things. That's certainly true. But others might. People are running payroll or seeing some anomalous things like, where's the manager? How does that roll in? Wirecard, Wirecard is a big payment company, global payment company, and they had this process. It's similar. People should think of it as similar to kiting. They were moving money around their global organization, and then let's say you move $500 million to this one account, then you move it to another account, then you take a snapshot on the different days. It's like, okay, I've got 500 million in 6 accounts. Now it looks like I have 3 billion, but they're on different days or different periods of time. And that was coupled with pretty extensive collusion and falsification of records. So those are three pretty significant ones, all about 10 years apart.
When was the most recent of those three?
Wirecard. That's just a few years ago. 2020, I think, is when it really came to light.
Okay, so a couple of years ago. And today we are moving on to the 4th episode in this series, and we're going to be talking about a case that is still underway. We're going to be looking at the FTX scandal. It's a very recent case where Mr. Sam Bankman-Fried, he's the founder of FTX, he was accused of cheating investors out of billions of dollars and making illegal campaign donations. This caused a bunch of fear in the crypto markets and caused FTX to collapse and a couple different bankruptcies, I think in FTX and in a couple other companies. Craig, what is FTX? What's their primary function and what service do they provide?
So FTX was a digital trading platform. So they would help people trade currencies. They would create the various tokens that showed value. So people could invest in digital currency through this platform. They also act as a bit of I'll call them a savior for this whole industry. They bought competitors that ran into trouble. So as people are having trouble, they bought Liquid Global, Blockfolio, LedgerX. They kind of rescued these funds when they had problems. So they were seen as, hey, anybody who runs into problems, FTX can make this work.
So how did these accusations come up against Sam and his company?
Some of the media, financial media and press had indicated some significant concerns. This brought about some rapid withdrawals. There was concern about instability. And so once the funds started withdrawing, that created a very significant challenge. There's questions about the balance sheet, and that created a drain on those funds. And the fall was precipitated over a very short period of time in November of 2022. CoinDesk wrote about Alameda Research's balance sheet that was loaded up with FTX assets, digital tokens, and created too much cross exposure. There's also other media, particularly financial media, raising questions. That created this huge sell-off, people pulling funds out because of the concerns. And then Binance was going to sell off their FTX tokens. So they were dumping FTX tokens, which would put additional pressure. They agreed a few days later to buy FTX, just to buy them instead of running into the problems, trying to sell their tokens. But one day later, they backed out of the deal. They ran into significant problems. 2 days later, they filed for bankruptcy. Sam Bankman-Fried resigned. And that was pretty significant. About a month later, he was arrested in the Bahamas.
Yeah. People start asking questions and
go on vacation.
Go on vacation to the Bahamas. I mean, that makes sense. So the court cases are still going on. What accusations are going against Sam?
Well, first, misappropriation of customer funds, using them for personal gain, personal reasons. Second, he was using funds from customers to pay and send money to Alameda Research, which was doing trading. So this is viewed in some senses as self-dealing, but not using customer funds for customer purposes. And then also this concealment of how they were misusing the funds, what their balance sheet was, how it was purported to look, to create confusion with investors and lenders. So once that unraveled, it became a bigger issue, and FTX unwound. The charges that have been filed that he has to defend include conspiracy to commit wire fraud, moving money for inappropriate reasons, actual wire fraud, right? Conspiring to do it and doing it. Commodities fraud, securities fraud, money laundering, right? Those are the first list. But because there's also elements of this related to funding political campaigns, he's also run afoul of the Federal Election Commission, the U.S. FEC, and campaign finance. So he's got quite a bit there.
Yeah, you start messing around with money laundering and campaign funding, and people don't just turn their eyes away. They'll start looking into it.
Not when it's $8 billion lost, right? $8 lost, nobody pays attention. You get up to $8 billion, you're messing with a lot of people.
How did they conceal the true source of the political contributions made using the funds?
Well, they made political contributions from a corporation, which is illegal. Usually people move it from a corporation into a individual account and make the transfers from there and take in the form of income as opposed to just using a pass-through. The whole process really was to create some sort of opaqueness around everything, make it harder to see or lack of visibility. One thing that struck me is he had made over 300 political contributions, and this was to the tune of tens of millions of dollars. That might be smart if you're trying to conceal something, because now you have a bunch of politicians who make laws who now you're supporting them, and so they would be probably favorable to you. That was one of the first things that really stood out. That's pretty massive. Second, to get around the contribution limits and reporting requirements that exist in the U.S. for federal from the FEC, he passed these through the names of different parties in the organization who are now deemed to be co-conspirators because the charge is against them as well. They participate in this, allowing themselves to be used for that. The reason for doing that is to confuse or muddy where the source of funds were, which was him and the organization. So that was the second, so a little bit of a misdirection there. And then finally, the communication was done very much through encrypted channels to prevent detection, make it harder to discover. So make donations to hundreds of politicians, bundle it up through other people so you can surpass what the limits are, and then encrypt your communication so it's harder to be discovered. Alas, they were still found out.
What kind of things can someone do in their company to find these things out? Like, let's say you're working at this company, you're in finance there, and how do you see these things and report them?
So the first thing you say is, do our liabilities exceed our assets by $8 billion? And if that's the case, you might say, how did that happen? I think, seriously, we've talked about this before. Visibility is one of the most important things for an organization to detect any type of issue. So full visibility to where your cash is, where it's moving, the cash flow and the forecast. It's instructive to know that FTX started in 2019. 2019, in 3 years. So you always hear about, the bookkeeper in the company is driving a super fancy sports car and takes 4 airplane vacations to Hawaii every year or to some island somewhere. Like, that doesn't seem right. Like, how could they spend that much money? And so when you see things that are out of alignment, that should be one clue. They started in 2019. Their valuation in 2022 was $30 billion, a little over $30 billion. Maybe it peaked at 32 something. Like, I don't remember the exact amount, but it was a significant sum, worth more than quite a few super regional banks, for example. In that time frame, in March, 2 years on, they got naming rights to the Miami Heat Stadium. And that was a deal of $135 million over 19 years. A little later in 2021, they also got naming rights to UC Berkeley for $17.5 million. Happily, they paid it all in crypto. And then when it fell out, that became a significant challenge for those at the University of California, Berkeley, to deal with that fallout. So they had to get someone else to name the stadium. But you think about that, in a couple of years, they're spending tens and over $100 million for naming rights. That seems a bit out of the ordinary. So having full visibility so that multiple people can see what's going on makes sense. You can restrict things, but where is all this money coming from? Why are customer funds not being maintained in customer accounts? Why is it being sent somewhere else, to Alameda? The other aspect is having the ability to report issues. You could talk about the tone at the top, where an organization ensures that people feel comfortable saying, this is not right, something weird is going on. And the second is, and maybe they feel comfortable saying it outright, but if they don't, is there a way they can do it anonymously and say, this is occurring, this is wrong, or this seems extremely anomalous and non-standard. How could this be? There seems to be a problem, and that provides a separate channel to alert people, particularly on the inside, to this potential issue that's brewing. I think those are the having the visibility and the ability to report potential fraud in an anonymous or a identified manner, or having both as options, are real strong methods for doing that. Financial statements also help too. Not really publishing balance sheets. That can be a challenge for any large investor.
Yeah, if you see something, say something. But in this case, the guys at the top are the ones who are hiding things, and so they're not going to set up the systems where people can easily say something that they see is wrong. What can people do that are listening to this now do if they don't have that structure in their company?
Find another job. Well, I mean, and you can't report it to a fictitious employee, right? You've got to report it somewhere. But that's a good question. What can you do if you don't have that? It's interesting. We do work for banks, insurance companies, Fortune 500, and other companies, and they require quite a bit. They require policies. How do you handle fraud? What do you do as a company? And they do that as part of looking at their whole network of trading partners, business partners, to make sure that they could discover issues sooner, that there's a mechanism for that to be resolved before it becomes a particular issue. So I think that becoming a standard, that there is some method of reporting issues, that's established, that's available, that's becoming much more standard. It's no longer, that's weird. It's an exception. This is how it can be uncovered. So good visibility, reporting mechanisms, those are two of the biggest.
Who sets up the reporting mechanisms?
Companies can set them up themselves, or they can use a third party where those things can be reported, and that can be shared with the executive committee. It can also be shared with the management of the firm, the chief executive officer, and others. It can also be sent to the board or shared to some type of committee made up of people in different groups. So there's different ways of handling that, but there's outside parties that can do that, published 800 number or specially designated emails.
Yeah, that's interesting. That's definitely could be something that you can easily get into a situation where you start asking questions and might have people just, maybe they're not doing anything wrong and you're asking questions and it just puts you in the spotlight, makes you seem like an You don't want to be annoying. You don't want to be bothering people above you, but you do want to make sure that you're keeping an eye on things, and that if one of your superiors is doing something illegal, you want to be able to track it, report it through the proper channels. So what kind of safeguards and oversight mechanisms should be in place to prevent similar incidents of misappropriation and deception in the companies of the people listening? We kind of got into that, but is there anything specific you have to say?
I mentioned a couple, and I would add to that, the visibility, able to report things. I think those are, as I said, those are two significant ones. I think the other is, do you have a good control mechanism in place? And the control mechanisms are not just purely accounting, though that is an aspect of it. Are all your reconciliation processes in play? And we think of 4 types of reconciliation: bank account reconciliation, cash proof, GL reconciliation, and file control. Those all need to be in play in an organization and well defined. That will track and manage the flow of funds and ensure that there's no discrepancy off the bat. That's pretty crucial. The second is this visibility to a forecast, and seeing where things are. It's like, how did the company grow so much, and what happened to the $8 billion? It's not some little oversight where, hey, there's a timing difference here, and it's, we're dealing with $1 billion flow of funds, and we're wondering where a 12 million is, and it could be a timing difference. This is a massive amount of funds that could be discovered. The other element here, I think, is, we talk about payment security training, this mindset of, how do I have a good control environment? People need to be kept up to date on fraud issues, whether it's related to external fraud or internal fraud, payment related fraud. We need to think about that from a financial perspective. And it's not good enough just to say, I went to school for that, or I took a course 5 years ago. It's, how do you stay current on different types of fraud? What's happening? What are the controls we need in place? How will people detect it? Because it'll be discovered through financial statements. It'll be discovered through lack of visibility. It'll be discovered by people who can detect anomalies, and it could be discovered by systems. And that requires educated people, the proper systems put in place to do that. Those are some of the elements that are necessary. But, when I talk about visibility, I've mentioned it before. It's, one aspect is, where's our cash flash report? Where is our cash? What currency? What account? All those different dimensions. And for some of the other assets that are very liquid, like cryptocurrency, you would still need to see that. Where is our holdings? Does that match up? Do I have all these different, coins? Where are they? What's the current value? Especially with something that's so valuable. So you'd want to see this distinction between the type of cash, near cash, and crypto that these organizations would have. These are some of those safeguards they would want to have in place.
Yeah. And we're talking about a crypto company, but a lot of these things apply for any company, any of the people listening, any of their companies. If you want to hear more about these safety principles, we have a course, Secure Treasury, that is a multi-part video series, and you can find that at securetreasury.com. We talk about different common fraud types. You can understand email security practices. You can understand desktop hygiene. And so if you're interested in learning more, there'll be a link in the show notes for that. You have any final thoughts, Craig?
I think the idea of staying current means both training and testing, but also whether it's listening to a podcast or reading up on some of these items or attending sessions, webinars, or sessions at conferences, figure out what's going on. That'll help your organization. You can pick up things from any of these discussions to say, we've got that covered, or here's something that we need to do to address that potentiality. We want to be able to do it efficiently and in a streamlined manner.
Thanks. You've been listening to the Learning from Financial Fraud series on the Treasury Update podcast.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.